Hello everyone, thank you for joining me today on Dave's Market Explorer. Right now, the market is sitting near recent highs around 7,041 on the S&P 500. Our timing system, which combines multiple layers of time and timing analysis, is showing a very specific setup unfolding over the next several months. Here's what we're watching. In the short term, from late April through the middle of May, the system sees a high probability window where the current up move could reach its peak. This is one of the strongest time clusters we've seen all year. Many of our tools are lining up in the same direction, suggesting this could be the end of the present advance. Traders and investors should be prepared for increased volatility and potential exhaustion signals during this period. Following that, the most significant window of the year appears to be from early June through mid-August. This is when multiple longer-term cycles point to a much sharper move lower. The system is flagging this as the deepest risk period of 2026, with a real possibility of a meaningful correction. During this time, the safest approach for most people is to reduce equity exposure significantly and shift toward more defensive holdings like cash and gold. Then, from September through the end of the year, the outlook improves. The system sees the potential for a recovery phase and base building after the earlier pressure. This is when we would look for clear confirmation signals before stepping back into the market on the long side. Overall, 2026 is shaping up to be a year of two distinct halves. A final push higher into the spring, followed by a corrective phase in the summer, and then a recovery window in the fall and winter. The key is discipline, using time as your guide rather than emotion. For investors and traders managing retirement accounts or other portfolios, this setup strongly favors a gradual, methodical approach, trimming risk into strength during the April to May window and staying patient through the summer correction before looking to rebuild positions later in the year. Markets are never guaranteed, but having a clear time-based framework helps remove a lot of the guesswork and emotion that often leads to poor decisions. Thank you for watching Dave's Market Explorer. If you found this helpful, feel free to like and subscribe, and I'll continue updating you as we move through these important windows. Stay disciplined, and I'll see you in the next update.